Hi, welcome back to another edition of Lippers Fund Flows Insight. My name is Tom Rosine. Thanks for joining me today. I'm going to be reporting flows for the week ended March 2nd, 2016. Investors actually injected, and this is conventional fund investors, injected about a net $5 billion in the conventional fund business this week. So the second week in a row, we've actually seen net inflows into the group, and we had a pretty good, strong performance. You know, we had some good news come out. We had a beige book, I would call a Goldilocks scenario from the beige book come out. Really was ho-hum. The economy's not doing all that great, but it still showed, growth is occurring, and so a lot of people saw that as an indicator that the Fed would probably forego raising interest rates, but they were encouraged by the growing economy. We also had durable goods order that came in and beat expectations handily, and of course the big story, and it's been the story over the last several weeks, oil actually increased, and of course stocks followed that. So it was a very strong return for stocks. And in fact, we saw the S&P 500 up about 2.94%. We saw the Dow Jones Industrial Average up about 2.51%. So it was really good numbers. However, investors remained a little sanguine in their outlook, but they did not follow through with mutual fund investments. We'll show you kind of that grouping and how it occurred. We'll show you a little bit of an ETF and mutual fund performance and also flows as we go. Let's take a look at our macro group to see how all this panned out. Macro groups, we'd look at equity funds first. $2.8 billion in outflows is what I was talking about. So we had good news, good returns. Investors are still, a little bit gun shy. They're waiting for some confirmation. In fact, the news today about non-farm payrolls will probably, hopefully, lead to some good fund inflows and returns for this next week. Taxable bond funds saw about $2 billion of inflows. Muni bond funds saw only about $1 billion of inflows, or I'm sorry, $100 million of inflows. And it's probably the smallest amount that they've had in quite some time. And money markets saw about $5.7 billion of net new money come into their coffers. So really, the name of the game was conservativeness, even though we had a pretty strong rally in equity funds. Let's turn our attention now towards equities in particular and see what happened in that group. Equity funds had about a 3.44% return. I told you it was a pretty good week. That is a very good week. 3.44% return for a 1 week return is very strong. Second week in three, we've actually seen plus side performance, and we again saw outflows about $2.8 billion. The third week in four that we've seen outflows, and how it broke out is we saw domestic equity funds lose or see about $2.9 billion go out their doors. Fourth consecutive week that they've had outflows. But when we take a look at the non-domestic equity funds, we saw inflows only to the tune of about $87 million. So we're really a ho-hum week there as well. But for the fifth consecutive week, they've seen inflows, and that has been the story. When we take a look at the groups and break them down, large cap funds actually saw outflows. Equity income funds saw outflows. And so that has been kind of the story as well. Large cap funds lost about $1.6 billion. Equity income funds lost about $1 billion. If we take a look on the non-domestic side, in particular, international equity funds saw the biggest amount of inflows, only about $362 million in inflows. And the global equity group, of course, which includes U.S., saw outflows, $274 million in outflows. Let's turn our attention now towards the ETF universe. Equity ETFs for the first week in five saw inflows. This was a snoozer, $450 million basically on the inflow group. Spider Gold, though, was the big attractor. So what we saw a lot of things was utilities, real estate, and gold actually taking money because people are still spooked. No matter what type of returns they had, strong returns the last 2 weeks, people have been spooked over the downfall and the if you will seesaw effect we've seen in the oil. Oil rises, equities go up. Oil falls, equity goes down. So this is what we saw was investors still doing. So ETF investors, particularly authorized participants, put about 1.1 billion into the GLD, the Spider Gold group, and then we saw the Power Shares QQQ basically taking in about $600 million net new money on there. On the flip side, if we look down at the bottom of the group, we see SPY, Spider SP 500, lose about $5.1 million. So people were bailing on that and actually going again after those safe haven plays. And we saw iShares MSCI, Japanese fund or Japan fund, actually lose money, only about $362 million for this week. Well, that brings us to the fixed income group, and the fixed income group brings us into a little bit more of a dynamic piece. Let's take a look at that group. Fixed income funds for the second week in a row basically saw about $2 billion in inflows for the third consecutive week, plus side returns 1.03% this week, and the big attractor of money was high yields, taking in about $2.6 billion. Second consecutive week, they've taken in money, and interesting enough, we actually even saw emerging market debt funds taking in new money on the ETF side. We'll get that in just a second. Really where we saw the outflows was in the corporate corporate investment grade debt funds. People are still waiting for maybe the other shoe to drop as far as downgrades go because of the relationship with oil. People are still concerned about oil and natural resources debt maybe getting downgraded. So corporate investment grade debt took it on the chin a little bit. $754 million in outflows. That's nothing really to write home about. We've seen a lot of outflows out of this group for a while. 15 consecutive week that we've seen outflows out of that group. Let's turn our attention now to the ETF group. The ETF group basically had a change of pace here. We saw that the ETF group took in almost $1 billion, $926 million. 8th consecutive week they've seen net inflows. And if we take a look, iShares iBoxx high yield, again, people putting risk on into these portfolios, going after the high yield groups, took in about $1 billion. Now, if we take a look at the Spiders Barkley high yield, it took in about $911 million. So certainly that was a story. People putting risk on. On the flip side, and we certainly saw that when we saw been watching the Treasury curve. If you see the yield, actually we saw flattening. Anything less than 2 years, we saw a rise in the yield. Anything greater than 2 years, we saw a decline in the yield. And so that actually equated through to people getting out of the way at the short end. And we saw at the short end of this group, iShares short Treasury bond lose the most, $1.2 billion and outflows from that group. Let's turn our attentions now to muni bond funds, and this has been kind of a happy area for quite some time. 22nd consecutive week that we've seen inflows, this time only to the tune of $125 million. Is probably the smallest amount we've seen in quite some time. 3rd consecutive week we've seen negative returns. So again, even though there's been some negative returns, we've actually seen inflows. Again, $125 million from the group. National munis accounted for about $55 million of that. And of course, they've had 22 consecutive weeks of inflows. All the rest, when we've seen kind of offsets, have been losses or outflows out of the single state muni bond fund groups. And so that certainly has been a story as well. This time we had positive inflows for both of those groups. Let's take a look at our money market funds and get to kind of the last sector of this. 3rd consecutive week we've seen inflows, this time to the tune of $5.7 billion. Taxable money market funds took in $6.5 billion, and this is how it broke out. The institutional investor had about $7.7 billion of inflows, while the retail investor actually took money out, $1.2 billion. That left us with a reserve, a little bit of offset. We had to find where the losses were. Tax-exempt money market funds actually saw outflows of about $800 million during this time period. Well, that brings us to the end, but before we get there, we had some great news this morning. I made reference to at the beginning of the segment that we saw non-farm payrolls come in about 242,000. That was way above what analyst expectations were, 195,000. So I think we're going to see a really good week ahead of us. In fact, this may have been the catalyst that will get the market going again, because until we get some big catalyst where the economy is moving in the right direction, I think you're going to see the sideways trading that we've seen in the equity market. Well, in either case, if you want to do a deeper dive, you can go to our site at www.lipperusfundflows.com, or you can just meet us next week where one of our analysts will talk about the flows for the week. Well, until next time, my name is Tom Rosine, wishing you the best in your wealth planning and creation.